Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook on the U.S. futures markets. So, we finally have our major six now that we have adjusted after the Forex market fiasco with the FXCM, all of that stuff. So we've got everything all locked and loaded, ready to go. But before we jump into everything, always make sure, swing on over to slingshotfutures.com, scroll down, click on the Join the Daily Outlook newsletter, and that will sign you up on our email list so that you will be notified every time something comes out for the Daily Outlook. You'll know exactly what's going on, you'll never miss a beat. And then also every single morning, we post our major morning levels for that day. Those levels can be huge areas of potential interest and always a good idea to have them at least marked up so you don't accidentally trade into them. Now, digging into the big six, first of all, FGBL, for you Eurex traders, are going to take a look at the Bund. Now, the Bund has a very nice run higher. It's one of those markets that was extraordinarily bullish today, all the way from the open. Had a nice run higher, good little three push wedge top, tried pulling back, and as soon as it went underneath the moving average, the buyers just slapped it right back up to the highs. Followed by the next pullback into immediate buying, You can see the aggression working up here. We finally had a little bit of a pause earlier this morning at around 8:30 or so, going on 9 o'clock. Nice little pullback to the moving average, but pretty stiff in terms of bearishness. Generally better to wait for the buyers to show up twice. They did, and gave another nice run back up towards the highs. But after we made that high, we've had a lot of trouble coming back to it. And you can see the last time they tried, immediately sold right back down, forming a brick top candle. No wick on the highs of that bear candle. And that shows that as soon as it opened up, the sellers swatted it right back down. Now, this could just be the start of a transition to a range, which definitely kind of fits the bill, right? It looks like that's the situation that the market wants to go in, and we're cycling up towards the highs of it. Now, we are also forming a little bit of a wedge in here, so really what I would like to see is for the market to pull back, down back into this 164.22 to 17 area, find some buying support, maybe even a trap low underneath the wedge, head fake down, and then get the pop back up towards the highs. Very unlikely that the bears are going to be able to turn this around immediately, just doesn't happen that way. So what I'm looking for again is just that nice little pullback. If we can get it, they may just keep going up here, but if we can get a nice little pullback, it would be a great area for the buyers to look to jump on in. Over on gold, pretty much, the same sort of thing. Nice bullishness working in the morning session. Big bull spike earlier this morning, and that led to a huge amount of inventory on the top and bottom. And that top and bottom really kind of held the market for a long time. Even after they broke out, they used it as support. They failed to make a new high, dumped back down, right back down into that support once again, and now we're seeing a grind back out. So that level between 1240.5 and 1238.3, that's definitely no joke. You don't want to mess around with that major area of inventory. There's a huge amount of orders that come in there and generally just causes the markets to go a little bit kind of bonkers in terms of back and forth. Tough to trade inside there, but if we can get a nice little pullback, break above this falling area of resistance, we could also be seeing this as a possible channel bear. But the one nice thing about showing the buy side here is simply that the sellers got a little too overzealous. They slammed the market down so aggressively that they just didn't have enough steam to get another leg to the downside, and now the buyers are pushing back up in. Now, one of the obvious areas that the market loves to come back to is the original breakout point, which is right there. We're sitting directly on top of it at 1242.9. So that location on gold would be a nice potential area to find some buying and selling pressure. In this case, selling, retesting the highs, both buyers taking profit there, and sellers that sold that breakout are trying to defend their position. If they fail, that's where you'd want to see a little pop higher, then a pullback, get the support buy, and then run back up towards the highs once again. Now, because we've taken our time so aggressively on this pullback, we made a new lower low, right? Very obvious new lower low and lower highs. If we do go back up to the highs, I'm not anticipating them to push all the way to a new high. If they do, we may find a little bit of interest there. But the one thing to keep in mind is simply the fact that, well, if they're having a hard time up here and they're catching this big of a pullback, by the time they get up back to those highs again, it might just be nothing more than a head fake above it and a failure back down, and then they transition into a range. So that's kind of what I'm approaching the market, assuming that if we do go higher, which I would love to be a buyer on a pullback for, by the time we get up to the highs, that may be all the steam the buyers have. Over on the Ultra Bonds, big move to the upside here as well. Beautiful bullishness. But if you look on the inside of these moves, there's a lot of back and forth, right? You see a lot of consecutive bull candles and bear candles, and then just a lot of black and white, back and forth, back and forth. Now, we are very aggressively bullish, obviously. The buyers were parabolic in nature, just on the aggression to the upside. By the time they actually even pulled back to the moving average, they didn't even allow it to get underneath it before slapping it right back up to a high. And now we're starting to form a little bit of a 3-push wedge top. That 3-push wedge top did come with a heavy amount of selling pressure back down to a potential trap low underneath that major swing, the one that they defended so aggressively back here. And they got a little underneath it, again, a little too overzealous. They ran out of steam, couldn't get another leg lower, and now they're falling back apart. So the issue that we have here is that we're very high in the move. It's going to be very tough to buy all the way up here. So what we would rather see is for the market to find this as potential resistance. It may even be a selling opportunity for the short term to then cause a pullback for us to look to buy into. Now that pullback could just be right here. It's definitely a line in the sand. We can see they held it, gapped above it, tested it again. They broke out above it, so we may find a retest here for another push back up towards the highs. If we can get a deeper pullback, I would love to see that 163.02 area tested, maybe even back down to 162.23 to 24 if we can get that drive lower. But at the moment, that kind of line in the sand is going to be right across there at 163.13, and we'll see what they want to do there. But right now, we're a little too high, need to be looking to buy on a pullback. On crude oil, inventories were a shocker of a number. The API report did have it pegged. The API report was saying that it should come out about 14 million or so, and it came out at 13.8 and some change, which the forecast for today was significantly lower than that. Now, the one thing that's kind of interesting here is if we have a massive amount of inventory, fundamentally speaking, the higher the inventory, the lower the price, right? If you have more, you decrease the price, so you can sell more of it. But that's not what happened. We had the inventory, and it did initially spike lower, but then we caught a rocket ship higher from the lows all the way up to the highs for $1 up off of the bottom, $1.17. So with that massive rally, fundamentally, something is obviously not quite right. Now, it's sort of like a soap opera, right? Stay tuned for tomorrow to see what happens because, could this be a rally before a massive decline lower, or did the market already have the numbers built into price based on the API report from yesterday? So it is definitely something to keep an eye on. But right now, I'm looking at this with a little bit of a slant in my eye thinking, I don't know if I believe you buyers. Fundamentally speaking, we should be collapsing right now if we have 14 million excess barrels. So if we do catch a rise higher, I'm very weary about buying much further up than the highs. I would love to potentially see even a trap, maybe a head fake above the high, and then push back down towards the lows. The one area of support that we need to break through for continued selling is going to be between 52.26 to 22. If we can break underneath that, I would love to use that as resistance for continuation to the downside. Now, if for whatever reason the market just doesn't care what it should be doing and it wants to bounce, you will find a lot of buy support off of that major low. Lots of inventory being put in there. That's what stopped the pullback, right? That's the bottom of that pullback move that we had. And if that is the case and they want to defend it, they're going to look for a buy move right back up towards the highs. But again, I wouldn't look for a big move up. So although we do need to be buyers, the buyers obviously own the market, I would do so very cautiously. If we get back up to the highs, honestly, I would look more to sell than to be a buyer, just fundamentally driven that we have so much extra inventory on crude oil. Over on the NASDAQ, very strong bullish momentum to the upside after a range start to the morning. We had a range start with a slight bullish incline, right, working its way higher. They got a little overzealous in the early morning session and pulled back and corrected with a big breakout to the downside, only to then sweep all the way back up to the highs. So what do we have? Well, we have a new low, a new high again, failure, new low, new high. So we're just in a range, and the range happens to be widening out a little bit. So with that huge range that we have here, we're at the highs of it, and we're potentially putting in a wedge up here. That could definitely be telling us that the top may be coming sooner rather than later up here. But the buyers still showing that they own the market. The bottom of the wedge is coming in as support, and we can see that they're still trying to defend that area too. Heavy bearishness into it, so be a little bit careful. But if we can get some nice bouncing up here, we may see one more attempt at the highs, and then from there, if they can make a new high, potential failure above, and then maybe we get the deeper pullback. What I would really like to do, just given the fact that we are so far up right now and we have a potential range in formation, a nice pullback between 51.85 half down to 82.25 would be a nice area to look for potential buying. This is where we put a top in on the early session and then a big dump lower. When we came back, they held it as resistance. When it broke above, it held as support. So I would love to see what they do if they can come back to it. If we can get a nice bounce out of that area, could be a nice opportunity to buy back to a new high. And if they break through it, might be a nice area to look for a sell back down to a new low to finish off this cyclical range that we seem to be working in. And then finally on the S&P, very similar to the NASDAQ today, a little bit slower and much more range bound as we can see here. Now, we did start off, same situation, nice little bullish run to the upside. They put in a, well, in this case, a triple top until a little bit later, and arguably a quad top with a slight little head fake above. But we put in a triple top up here and a big failure to the downside. Now, again, what do we have? A new low, new high. New high again, failure, failure, new low, new high. We're cycling back into this range again. So with this cyclical range that we're working with in the S&P, they just tried to poke their head outside of the highs and they got slapped right back down again. So with that heavy amount of bearishness coming right at the highs, we have to assume that the buyers just don't have the steam that they need. That may just mean that they need a deeper pullback before trying it again. But at the moment, we're in a major area of resistance at the top of a possible forming range. Not the best place to be a buyer. If anything, you'd rather see a buy at least a little further down. It does appear as though there is a nice shelf that is formed across here at around, 88, 89 in that area. And if you can get a nice little bounce off of there, maybe even a trap underneath, it could spark a quick rise to the highs. But we have to also understand that the last time we were here, the last several times, it pushed down to the next area until it actually broke out. So that may be what we're looking for here. We're high in a range. I would rather be a seller at the highs of a range, but it's hard to be a seller right now due to the overall bullish trend. So let the sellers prove themselves first and then look to potentially jump in for a move down. So that's going to do it for the daily market outlook for the futures markets in the US here, as well as one of them for the European traders for tomorrow morning. Overall, great day. It was a little bit kind of slow and choppy, and with crude oil a little bit funky, with the market doing fundamentally something it shouldn't be doing, but it may lead to some interesting moves for tomorrow. We don't have any big news slotted for tomorrow. There is, from the Bank of England, Governor Carney speaking, but that's not until 13:30 Eastern time, so not really anything that we have to worry about for news tomorrow, and fingers crossed that means that we can get some consistent movement tomorrow. So that's going to do it for this one. If you have any questions about it, you can always send me an email, jbrink@slingshotfutures.com. Don't forget to register for that newsletter so you never miss it, and as we always say, make a plan, trade that plan, follow your rules, and you will do A-OK. Till tomorrow, have a good one.